Hello and welcome to another video on cross-border payment. So the whole point of today's video is to dive deep a little bit more on the cross-border payment, what it is, what are the type of cross-border payments, specifically wire transfers, as well as the different networks involved when it comes to do this wire transfers. So after all, the cross-border payments involved is the movement of funds across borders. And while Stripe mentioned that there are some challenges as well as risks to navigate, some regulation that you have to follow, fees or hidden fees, despite to all of those challenges, business look for this solution or for this alternative to reach to new markets, find new customers, and accelerate growth. And especially if you combine it with a proper payment method and strategy, it allows you to reduce costs, which is something that happened here. I am facing that, or I'm enjoying that. Okay, it allowed me to reduce costs, improve cash, as well as accelerate growth. So Stripe, on the Stripe blog, where they talk about is what are the cross-border payments, as well as the type of cross-border payments for business, the trade-off involved, the benefits and the downside for business, as well as how this process works, sending and receiving payments. So Wise described that the way how this works is by where the business is located and where the card to pay was issued. And that's the two component that really matters, especially on cross-border payment when you want to rely on your card as a business or a credit, right? So where is the business located that you are actually shopping, and where your card was issued to pay for those goods and service from that business. Okay, so there are several type of cross-border payments. So first, and according to Investopedia and the uh, Stripe, we have wire transfers, which are electronic funds between different financial institutions or banks. So financial institutions, after all, according to the Investopedia, they exist to provide a variety of deposit, lending, and investing products to customer, business, or both, allegedly, right? In theory. So we have banks and credit unions, something that is more common or far common on the US, as well as investing banks, right? Such as JP Morgan Chase, which was founded in 1799. So you're not so all of these players actually have a long history, and they are obeying most of these brokerage firms like Interactive Brokers, Fidelity Investment, Webull, Merrill, TD Ameritrade, Robinhood. All of them rely heavily on these investing banks, which, after all, most of or some of them have over 150 years of experience. So, for example, JP Morgan, which was founded in 1799, Goldman Sachs in 1896, Morgan Stanley in 1935, which is more recently, Citigroup in 1853, Bank of America, which their, their first predecessor is circa 1784, Credit Suisse in 1856 and Deutsche Bank in 1870, right? So you have this seven, according to Investopedia, these seven investing banks. So JP Morgan, and it's important too, down the line, you're gonna remember each one of those names because they are the big players, the MBA players, the financial MBA player. So you have JP Morgan, Goldman Sachs, Morgan Stanley, Citigroup, Bank of America, Credit Suisse, and Deutsche Bank, right? And also you have broker firms which enter under the under the umbrella term of uh, under the umbrella term of financial institution. So we have brokerage firms, okay, such as Interactive Brokers, founded in 1978, Fidelity Investment, founded in 1946, Webull in 2017, Merrill in 1914, TD Ameritrade in 1975, as well as Robinhood in 2013. So you have, and also mortgage lender, and this is important to understand the different type of financial institution because you can now understand what are the actors involved on the cross-border payments, okay, or one of the type of cross-border payment like wire transfer, electronic the electronic transfer electronic transfer funds between these companies, okay, whether it's banks or credit unions, investing banks, JP Morgan, Goldman Sachs, uh, uh, Morgan Stanley, Citigroup, Bank of America, Credit Suisse, Deutsche Bank, or broker firms like Interactive Broker, something that I would like to open an account here. Okay, so Interactive Broker, Fidelity Investment, Webull, all right. So Interactive Broker, Fidelity Investment, Webull, Merrill in 1984, Merrill founded in 1984, TD Ameritrade, and Robinhood. So with this understanding, okay, as well as you got mortgage lenders like Bank of America, PennyMac, and NBC, okay, mortgage lenders. Each one of them enter under the umbrella terms of financial institution, banks, credit union, investing banks, brokerage firm, and mortgage lender. Okay, so keep reading about when this wire transfers can happen across different parts of the world, that they rely on different wire networks. So wire networks in banking you have is the SWIFT, okay, the Society for Wire, the Society, uh, the Society for Worldwide International, okay, the Society for Worldwide Interbank Financial Telecommunication, like this. Okay, the SWIFT is a global messaging network used by banks and financial institutions to securely and accurately send and receive information, including payment instructions, account statement, and other transaction-related message. So SWIFT codes are used to identify banks and their branch in their networks, and it is overseen by the G10, by the central banks, by the central banks G10, or by the G10 central banks, by the G10 central banks. So if I want to take a look at the SWIFT here from Investopedia, Okay. What is Swift? Okay. So they allow this network is that is used by financial institution, credit union, banks, investment banks, brokerage firms, or mortgage lender. Okay, this network is used by all of these actors involved to quickly, accurately, and securely send and receive information such as money transfer instruction, right? So in this article, we're going to explore what Swift codes does, how it works, and how it makes money. But it makes money based on their, yeah. How does Swift make money? Swift members are categorized into classes based on their on share ownership. All members pay a one-time joining fees plus annual support charge that vary by member class. Swift also charges users for each message based on message type and length. These charges vary depending on the bank use volume. Different charge tier exists for banks generating different message volume. Switch has also launched additional service as described above, backed by Swift long history of data. These servers include business intelligence, reference data, and compliance servers and offer Swift other income streams. So most of the time they charge user for each message based on the type and the length. So they charge per transaction. And this charge vary depending on the bank use volume. Depending on the bank use volume. Different charge tier exists for banks generating different message volume. Different charge tier exists for banks generating different message volume. So depending on the volume you're gonna send or receive, they will gonna okay, the Swift or this network will charge them a fee. Will charge a fee to that financial institution. Swift also launched additional servers as described above, backed by Swift's long history of data. And these servers include business intelligence, reference data, and compliance service, and offer Swift other income streams. So the whole point of today's video is to understand what is Swift, okay, which is one of the wire networks used in the wire transfer, which is one of the type of cross-border payments. The reason to look at this is it'll allow business or individuals, if you're a freelancer as well, okay, but it allow business that it allow business to reach to new market, find new customers, and grow their business despite the challenge of some regulation that you need to follow, fees, additional fees or hidden fees, as well as risk to navigate, that it can be complex and a challenging process. So despite all of this, business choose this because it is important for them since they can reduce costs, improve cash flow, as well as accelerate growth. So that's something awesome to understand. So SWIFT is this Society for Interbanking, Society for Worldwide Interbanking Financial Telecommunication, which is a system that allows financial institution or that is used by financial institutions to send or that is used by financial institutions to accurately uh, to send accurately like this Okay, this is a network that is used by financial institutions to accurately, quickly, and securely send and receive information such as money transfer, money transfer. So you can think of this as the internet. So a good analogy, if I ask ChatGPT for this, okay, Swift is is making is comparing Swift. It's a valid comparison. It's a valid comparison. Yeah, it's a valid comparison between. So it's a valid comparison. It's a valid comparison between. Okay, it's a valid comparison between Swift and the internet. In summary, while it is possible to draw a comparison between Swift and the Internet, in terms of their role in communication and information exchange, they are fundamentally different in terms of scope, purpose, and functionality. Swift is specific to financial institution or to financial industry messaging needs, while the internet is a broader network that facilitates communication and interactions across various domains. Mhm. So we can think of the Swift somewhat as the internet, but exclusively for the financial industry, right? Where this Swift uh, allows to accurately, quickly, and securely send and receive data such as uh, money transfers. Okay, okay. So with that, okay, and it is overseen by the G10. This is something also important. And the way he make money is by the volume of the transfer, and is by per transaction and the volume of the transfer. Interesting. So with that, that'll be all for this video. Take care. Bye bye.